Ever heard of investments promising big returns but come with a catch? Welcome to the world of high-yield debt. Some call it a high-stakes gamble, others see it as a savvy way to grow wealth. Is it right for you? Stick around to find out. It could change how you think about investing. High-yield debt, often called junk bonds, might sound intimidating, but they're a fascinating part of the financial world. These are bonds issued by companies with lower credit ratings but higher interest rates. Today, we'll explore what high-yield debt is, the potential risks and rewards, and whether it's worth considering in your investment strategy. High-yield debt refers to bonds issued by companies that don't have the best credit ratings. These companies need to offer higher interest rates to attract investors because they're considered a higher risk. Think of it this way. A company with a strong credit rating might offer bonds with a 3% annual yield. A company with a lower rating might offer 7 to 10% to compensate for the risk of default. So, why take the risk? The simple answer: higher returns. For investors looking to boost their income, high-yield bonds can be an attractive option. They're especially appealing in low-interest rate environments where traditional bonds and savings accounts barely earn anything. But with high rewards come high risks. Here's what you need to watch out for. Credit risk. The issuer could default, meaning they won't pay back the bond. Market volatility. High-yield bonds are sensitive to economic downturns and interest rate changes. Liquidity issues. It may be harder to sell these bonds quickly in tough market conditions. High-yield bonds aren't for everyone. They're often best suited for experienced investors with a higher risk tolerance or those diversifying a well-balanced portfolio. If you're new to investing or prefer stability, sticking to safer options might be the better move. If you're curious about high-yield debt but don't want to pick individual bonds, consider mutual funds or ETFs that focus on high-yield bonds. These offer diversification, which spreads the risk across multiple issuers rather than putting all your eggs in one basket. High-yield debt can be a powerful tool for boosting returns, but it's not without risks. Whether you see it as a smart investment or a risky gamble depends on your financial goals and risk tolerance. Remember, this is for educational purposes only. It's not financial advice. If you found this video insightful, hit that like button, subscribe, and share it with others. Understanding high-yield debt can lead to exciting opportunities for wealth growth. Stay curious, keep learning, and who knows? You might find that this investment avenue is just the right fit for you. By attending seminars, reading up on the subject, and engaging with fellow investors, you can deepen your understanding of high-yield debt. Education is key to making informed decisions that align with your financial aspirations.